Welcome to the pre-market insight for April 23rd. We just had the job numbers announced. Let's take a look at the chart. So we're taking a look at the the S&P 500 futures, and we're coming in, I would say, pretty much flat at around 2802, 2803. Now, I'm going to take you down to the lower term time frame to see exactly how important in context this actually is. And we've spoken a number of times in the pre-market insight before about the importance of understanding context in terms of how the news headlines is reported. For example, today we're coming up 14 points, just about 0.5%. And when you hear that news headline being reported, you want to always ask yourself, okay, well, where is this in terms of how do I compare this to the recent price action for there being anything actionable or anything significant being reported by these numbers? And as you can see, for such an important report as the unemployment claims, this is a very fairly muted reaction, i.e. we have not really done anything. If we look at the 10-day, 30-minute chart, you can see that we have a very clear prominent high here at Friday's high at 28.85. And we have a very prominent low made on Tuesday evening at the close, just about at around 27.17. So we're trading just about 150, 160 point entire range for the week. However, if you look, we have this nice area of balance in between here, just around a low of 27.82, and most recently in the price action just at around 27.68. And on the top of that range, and we spoke about this yesterday in terms of what could we possibly expect given that we had a gap up that was holding. We spoke about us possibly fading back down to the low of this range just at around 27.70 or so, and that's exactly what we did. And to the upside, if we were going to stay in a balanced day, the target would have been this high here at around 28.07, which actually we did trigger right on the last 10 minutes of so trading. And so this is not having a crystal ball or waving a magic wand in terms of predicting price. What it is understanding how price works, understanding market structure, understanding the story and the narrative that both market participants, buyers and sellers on the tape are telling us, for those who are keenly listening and observing what they're doing. So we have a gap up, but where did we gap up to? We gap up right to the top of yesterday's range at around 28.05. So at this point, we need to see what is the action. We need to observe what on the open are buyers and sellers aggressive in doing, i.e. are sellers going to take advantage and sell at these higher prices of the most recent range after having a bit of a rally to the upside and push us back down into the range? Or are we going to find buyers here that are going to take us from the middle of the range to retest the lower side of the upper half of the range? And by that I mean we have this 2800 level here, but then right above we have 2823, which was the low that we made on Friday, and then this level here at 2850 as well, back into the upper portion of the range. Keep in mind, on the longer term time frame, if we zoom down to the weekly, you can see that all we've done thus far is create an inside week, which after 1, 2, 3, 4 up weeks in a row is fairly typical to have an inside week, i.e. this week's price action is contained wholly in the range of last week's price action. As you can see, we had a high last week of 28.85, we had a low of 27.11. This week we had a low of 27.17 and a high of 28.75. So completely contained within last week's price action. I would probably expect this to continue if we do not have any catalyst that is going to break us significantly to the upside. Specifically given the fact that Apple, Google, and Amazon are going to be reporting earnings next week, I do believe we're not going to see any significant sell in the major indices. Individual names are different in the major indices until those earnings are passed. And in fact, in terms of short-term price appreciation, to me, the risk is to the upside given the fact that there possibly will be some people speculating on positive earnings in these names and bidding those securities up. Given the fact that for the market-weighted indices, the S&P and the NASDAQ in particular, Apple, Google, Amazon are heavily weighted, Microsoft are heavily weighted, as those securities appreciate, regardless of what the others do, it is going to at least allow the indices to become stabilized and or appreciate in the short term. So to me, today, I believe the risk is to the upside, but we'll see how that plays out. Let's take a look at gold. We spoke about the fact that not only is gold a volatile mover, but that we were looking for a dip buy in gold if we were to be able to hold that 1670 level on a closing basis. We actually, very sneakily on gold, ran through that 1670 level, made a low at 1666, reversed and completely shot to the upside. And so now we're just retesting the underside of this range here, just at around this little range right here, between an extreme low of 1724 and of that range an extreme high of 1755 to the upside. So I would be not necessarily looking to fade gold here because of the fact that we spoke about that commodities, oil and gold, are they the tail that is wagging the equity markets, i.e. leading the equity markets higher. As you can see this morning as well, CL is also up positively just about 250 or around 18% in this month's contract. And of course, this is very clearly looking for a prominent retest of the underside of this range here at around 1980. So given that we have some room to run in oil, I would lean slightly to the long side in the equity indices as well. We'll still see how that has to plan out. Let's take a look at Google. We spoke about the fact that the 1266 level on Google was particularly important. Lo and behold, what did we do? Yesterday, we came up into test the underside of this range here at 1264. We sold off, but look, more importantly, we broke and held and closed just at around 1258. So we're within striking distance of that 1266 level that we want to see Google consolidate around for any short-term momentum to the upside to continue. Of course, we mentioned earlier that Google is reporting earnings next week, so be very aware of that. This week's premiums are the last weekly expiration that will not be juiced with implied volatility to account for the added risk of a large move going into earnings next week. So if you want to play Google long here, if we do have any sign of weakness in the indices that takes us back into this 1235 area, that would definitely be a spot to speculate long for a move into next week. On the short side, we're currently trading 1264 in the pre-market. If we can retest yesterday's high just at around 1280, that would probably be a spot that you can probably begin to dip your toes in the water short. Let's take a look at Apple. Of course, Apple has earnings coming up next week as well. And you can see that we came right into the underside of this most recent consolidation right here at around 278. We backed off a bit, but not much. Given the fact that we had this very aggressive trend to the upside and all we gave back was less than a third of it, I would expect some more continuation on the upside in Apple. Perhaps you get a pullback into 274, which I believe was a pre-market low. And in that case, I would probably be looking to speculate on the long side in Apple. That is not to say that it cannot retest its most recent lows, yesterday's lows at 272. But if the bid today does have a bullish bias, then going long Apple at 273.50, 274 is not a bad asymmetric risk to reward prospect. And lastly, we'll take a look at TLT. TLT this morning is trading 169.58, or just where it started, just where it closed yesterday evening. And we spoke about the fact that we have a very nice consolidation here between the extreme low of 168.71 and yesterday's close at around 169.50. So this area is providing some level of short-term price support right here. Again, the long play on TLT, buying into this area, looking for a retest back into 170, 172.15 on the upside, and then 175 in higher levels. If we do break down, then we can very quickly see this level here at 168, and beneath that, the 166 balance that we broke out of just a matter of days ago. So you can clearly see that here, this 166 balance that we broke out of, all right? Be safe today, guys. Cheers.